China's oil demand rebounded after the COVID-19 pandemic and became the main driver of global oil demand growth. China is the world's largest oil importer and consumer, accounting for about 14% of global oil demand. In 2020, China's oil demand was severely affected by the COVID-19 pandemic, which caused lockdowns, travel restrictions, and economic slowdowns. According to Bloomberg, China's oil demand dropped by about 3 million barrels per day, BPD, or 20% of total consumption, in February 2020. However, China was also the first major economy to recover from the pandemic, thanks to its strict containment measures and stimulus policies. As a result, China's oil demand bounced back quickly and surpassed its pre-pandemic levels by the second half of 2020. According to Business Insider, China's oil consumption rebounded to about 13 million BPD in May 2020, compared to 13.7 million BPD in December 2019. China's oil demand continued to grow in 2021 and 2022, driven by its robust economic recovery and rising industrial activity. China's GDP grew by 8.1% in 2021 and is expected to grow by 5.5% in 2022, according to the International Monetary Fund. China's oil demand is projected to reach a record high of 15.2 million BPD in 2022, according to the International Energy Agency, IEA. China's oil demand growth has also been supported by its strategic stockpiling program, which aims to increase its energy security and diversify its supply sources. China has been building up its crude oil reserves since 2004 and has accelerated its purchases during periods of low oil prices, such as in 2020 and early 2021, according to oilprice.com. China added about 200 million barrels of crude oil to its strategic reserves in 2020 and another 100 million barrels in the first half of 2021. China's oil demand growth has become the main driver of global oil demand growth, especially as other major economies have faced challenges from the pandemic, inflation, and geopolitical tensions. According to the IEA, global oil demand is on track to rise to a record 101.9 million BPD in 2023, with China accounting for about half of the increase. The IEA also warned that the recent decision by OPEC and its allies to cut their production could drive oil prices higher and hamper the economic recovery and growth of other countries. In conclusion, China's oil demand has rebounded after the COVID-19 pandemic and became the main driver of global oil demand growth, thanks to its rapid economic recovery, industrial activity, and strategic stockpiling program. China's oil demand growth has also contributed to higher oil prices and market volatility, posing challenges for other oil consumers and producers. China is the world's largest consumer and importer of oil, but it also faces growing challenges from its dependence on fossil fuels. These include rising energy costs, geopolitical risks, environmental impacts, and climate change. To address these challenges, China is pursuing a strategy of energy diversification and innovation, aiming to reduce its reliance on oil and other fossil fuels and increase its use of clean energy sources. One of the key pillars of China's energy diversification strategy is to develop its domestic renewable energy resources, such as solar, wind, hydro, biomass, geothermal, and ocean energy. China has become a global leader in renewable energy deployment, with the largest installed capacity of solar PV and wind power in the world. According to the IEA, China accounted for 44% of global renewable electricity generation in 2020. China has also set ambitious targets for renewable energy development in its 14th Five-Year Plan, 2021 to 2025, aiming to increase the share of non-fossil fuels in primary energy consumption to 20% by 2025 and 25% by 2030. Another pillar of China's energy diversification strategy is to promote energy efficiency and conservation, which can reduce energy demand and emissions. China has implemented various policies and measures to improve energy efficiency in various sectors, such as industry, buildings, transportation, and power. For example, China has adopted mandatory energy efficiency standards for appliances, vehicles, and buildings, as well as incentive schemes for energy-saving products and services. China has also invested heavily in smart grid technologies and demand-side management systems to optimize energy use and integrate more renewable energy into the grid. A third pillar of China's energy diversification strategy is to foster innovation in clean energy technologies, equipment, components, and materials. China has recognized that innovation is crucial for achieving its long-term goals of carbon peaking by 2030 and neutrality by 2060, as well as enhancing its competitiveness in global markets. China has increased its spending on research and development, R&D, in clean energy fields, such as advanced nuclear reactors, carbon capture and storage (CCS), hydrogen and fuel cells, biofuels and electric vehicles (EVs). China has also established a number of national innovation platforms and demonstration projects to facilitate technology development and commercialization. China's efforts to diversify and innovate its energy system have yielded remarkable results in recent years. China has not only reduced its oil intensity, the amount of oil consumed per unit of GDP, by more than 40% since 2005, but also increased its share of global patents in clean energy technologies from 6% in 2000 to 22% in 2019. China has also become a major exporter of clean energy products and services, such as solar panels, wind turbines, batteries, and EVs. However, China still faces many challenges and uncertainties in its quest for energy diversification and innovation. These include the high cost and technical barriers of some clean energy technologies, the lack of a coherent and stable policy framework to support innovation, the uneven distribution and integration of renewable energy resources across regions, the potential trade conflicts and geopolitical tensions with other countries over energy issues, and the social and economic impacts of the transition to a low-carbon economy. Therefore, China will need to continue to invest in R&D, strengthen policy coordination and cooperation, enhance market mechanisms and incentives, improve infrastructure and grid flexibility, balance domestic and international interests, and engage with various stakeholders to achieve its energy diversification and innovation goals.